Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. Hello and welcome everyone. Today we're going to talk about a couple of trades, a trade that we have on the UK100. So this trade was placed here, which was the 22nd of February. Now we are, 10 days later? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So which is 2 trading weeks later and the trade still hasn't gone anywhere. So just a quick couple of updates is we have the trend line, we have bigger cyclicity, we're expecting the market to pop to the upside here. This level here is a record high. So if we look at this here, go back far enough, that is historical record high. So we've broken that. So the idea is that we wanted it to come back and retest it, and that's exactly what happens. It came back, retest that area. It's been sitting on that level. Now ideally I would have liked to see a bounce long before there. I'd like to see it from here take off, but it's now come back into the trend line area. And yes, I understand that trend lines can be subjective. We could pull that trend line down there, I could have it up here, and I could pull this down a fraction lower. So I understand trend lines are very subjective. I understand I can pull that down to here and then it doesn't hit anywhere. Absolutely understand that completely. But with the likes of the trend line, with the likes of the horizontal level as well, and the pullback here, and then adding a little bit extra to it. So if we have a look at the European markets, if we look at the German DAX had the very same setup here, came back, bounced off the trend line, and then look, has moved to the upside. So with this one particularly, we would be looking to move our stop loss inside break even and banking in some profit out. So that's at a 1-to-1 already. I'll put that at the 3-to-1. The French CAC, similarly, it's come back, hit that floor and bounced to the upside. So the question is the UK100 going to follow what the European market is doing so far? And as a general rule, this one has been the market leader over the last 6 months. It's been the one that's trending, where the likes of the European markets have been treading water. So at the present moment, this is treading water and the European markets are sort of going up. So we would expect this to follow. It's just a question of, will it come down a little bit further and then take off, or are we there poised, ready, set up for this to take off? And then if it does take off, remember this is record highs. So where does it go to? where do we see this? Where do we see this going? What's the maximum we can see this running to? So the idea also is to make sure that we are covering ourselves. We're trailing our stop loss. We're banking in profit. We're par closing positions. We're making sure when we're looking at the likes of these things that they are in the correct area. I want to just make sure that you guys are aware of that. Now, something also has come up is Forex Factory. Okay, so something also coming up is we have some news coming out today. We have some big news coming out today, and it's just to make you guys aware of it. Okay, so at 3 p.m. UK time, so we have that there. 3 p.m. UK time, we have Fed Chair Powell testifies. Now, there's a couple of little things that we sort of need to know with the likes of this is one, that this is pretty important news. This is really important. And the idea is that a lot of people don't sort of understand. Now, if Powell comes out and he's talking about, so let me go to the dollar index, and he goes to the likes, starts talking about So if we can see here that we have a little bit of strength on the dollar index. So the dollar index is getting stronger. So since the beginning of February, for a month, we've had dollar getting stronger against all currencies. So if we have a sort of announcement here that Powell is talking hawkish on the market, or he's talking about aggressively moving interest rates, this will be bad for the likes of dollar index. It'll be bad for the likes of the US stock market. Okay, so we would expect markets to start to drop quite quickly on the back of that. Okay, so that's something that you guys sort of need to be aware of. It's something that has always happened when they're talking about this, and this is why this big drop here, it's because they started moving the interest rates up much more aggressively than expected, and they were very aggressive, where Europe hasn't been as aggressive with the interest rate hikes. They've been doing it slower and steadier. Now, as we got down here, it's the market, the jobs data was good, the inflation rates had dropped, the interest rates were actually quite well, so that they had slowed the economy down, and this is why this has popped to the upside. So if similar happens and everything's going well, then this should theoretically continue going up. But if Powell comes out and say, look, they're now more hawkish, that they're now expecting higher interest rates, 0.75 basis points, you will see the likes of the dollar index getting weaker, and then you will see the likes of the US equities also dropping. So I'm going to have a quick look at Euro USD. And why I'm clicking Euro USD is because 60% of dollar index is weighted against Euro USD. So there was a little floor there, a double bottom, and had that little pop. So question here is this overall momentum going to continue to the upside, or is that a phase one, phase two, and then we get a dog leg to the downside? So they're the sort of questions we need to be sort of asking ourselves. Are we now going to get this down? So we have our phase one, phase two, phase one, and it's broken that sort of level that was there. So that's the first question. And the second question is dollar actually going to continue getting stronger? Are we at a point here where we expect dollar now to start this next phase one? So there's phase 1, 2, 1, 2. You could say 1, 2. Is this now the next one to the upside here? So they're the type of questions you have to be asking yourself. And at the minute, we're in this no man's land. It's not at a point where I am looking to trade this. I needed to make a decision, go up and then come back down to this trend line, or break and retest. Once it makes those decisions, once it does what it's supposed to do, that's where I get in and trade, because we're trading the change of direction is very hard. What you're looking for is, once it changes, this meaty bit in the middle. That's what you're looking for. You're not looking for the change down here. It's once it changes, that's where we're looking to get in. Phase 1, 2, 1, 2. We have the two clear cycles. We actually have a setup happening here, and then we take it. This is the bit that we're looking for, that meaty bit in the middle. We're not looking to get in on these transitions or changes. So once these transitions are confirmed and we are actually continuing that trend, that's where we get in. And if a transition happens here and a reversal changes, that's where we also get in. So we wait for the confirmation and then we jump in and trade. We're not looking to jump in and try to predict the market. Let the market prediction happen, and then what we do is we take the high probability trades in the middle, and that's trading in a nutshell. Now, going back to the indices here, the US. So again, I talk about if it's hawkish, if it's bearish, if they're talking about aggressively 75 basis points or 0.75, then I would expect to have a sell-off day today. But in the meantime, we probably will have a bit of bullish momentum. There are buyers here in the market. Yesterday, the buyers pushed up and then the sellers took over, and that's why we had a high test bar yesterday. And I would expect similar if Powell comes out with the likes of hawkishness or aggressively moving the interest rates. If he doesn't, I would expect this to continue to the upside, probably back up to around here. So anyone who is taking this long, brilliant. But for me, it wouldn't have been a long trade. I wanted it to come down to here. I understand that there was a double bottom there. Brilliant trade if you took it off that double bottom. But for me, it wasn't enough of a setup there. Very, very similar with the S&P. S&P did have a level. It did have a level at a doji bar there. So anyone who took that along, again, well done. Again, it wasn't a big enough setup for me. But the Dow was the better one. So we had 1, 2, 3, 4 touches. And this is why we have a long trade on the Dow. At this present moment, you are up 1.36%. I would be looking to move my stop loss inside break even, potentially par closing the position and then letting the rest of it run, which means then I'm in a win-win situation. I physically cannot lose in the market at the moment. And there how I would potentially edit those trades. That's how I'd manage those trades. And also if from now on, that's the way we would look at these trades at the minute. Till things start to trend and trend really nicely, we're always moving our stop loss, banking in profit, trailing stop losses. That is just the way the market is at the moment. So we have to be able to be agile enough to actually start moving our stuff, banking in stuff, making sure we're not leaving huge exposure on the table, because what is happening as of late, we're getting triggered in, hitting between 1 and 1.5%, and then it's dropping and it's stopping out a 1% loss. So for anyone who doesn't understand that, this red signal here, we risk 1% of our capital, and this green thing here, we're actually looking for a 3% reward. So if this is scenario here, you'd risk 100 quid, your reward is 300. You risk £1,000, your reward is £3,000, and that's what that is there, risk to reward 3. So that means then you're risking more percent to make 3. Anyone who is interested and has any questions on any of the likes of this, click on my link in the description below. Go on to the free trading course and ask as many questions as you want. Thank you very much. Hope you have a lovely day. Thank you. Bye bye.